top 5 in private credit now, and notably top 5 in alternatives as a whole. And so, they've long been top 10 in the space, rivaling the names like a Blackstone, Apollo. But when you think about BlackRock, you're thinking about $11.5 trillion in assets, a couple $100 billion in alternatives. That's a pretty small piece of the pie for them. So you don't necessarily think of them as a main leader in the alternative space and private market space. But what we've seen so far this year is 3 transactions: GIP, Preqin, and now HPS, and they're really pushing into this space because that's where the growth is and that's where the fees are.
It's just a phenomenal deal. You can do it with all stock as well. How cool is that if you're BlackRock? Who is HPS? Are they ex-Goldman guys? Is that kind of how big are they in the space?
Yeah, so they're about 150 billion now. And like you noted, I mean, BlackRock had about 80 billion in private credit prior to this. So it really more than doubles that business for them. And I think, what you're seeing a little bit at BlackRock is sort of this catch-up game. As I just noted, those 3 transactions really geared towards the private markets this year. And they're paying, heftier prices for these types of transactions. I noted this is where the growth is. This is where the fees are. The $12 billion price tag for HPS, that's about 8% of assets, 30 times, fee-related earnings. So they're sort of playing catch-up in this space. And when you think about HPS, 150 billion is not small, but that's about 1% of BlackRock as a whole, right? But when you look at the fees that HPS is generating, that's almost 5% of what BlackRock's revenue is. So you can sort of think about the dichotomy there of aligning the organic growth opportunity more with the revenue opportunity.
Are there more HPSs out there?
There may be. I don't think we're going to, I won't say I don't think we're going to see BlackRock do any more, because they are showing that they're taking initiative to really beef up in a space that you could argue they were a little bit under-indexed versus some of their traditional competitors in the space. So we'll be interested to see what is potentially coming down the road. But again, let's remember that they are sort of digesting a handful of transactions that are pretty sizable and what we'll call transformational for a business that you're typically thinking of sort of the index and passive type products.
At the end of the day, who competes with BlackRock, really? Aren't they just...
Well, okay, what is BlackRock now at this point?
Yeah, what is BlackRock now at this moment?
BlackRock is, I guess, I'll say everything sort of in the asset management
So you're at dinner
space.
at Thanksgiving and like someone's like, hey, what's BlackRock? And you're like, it's everything.
Yeah, it's a little bit of everything now in the asset management space. And again, I think they're really filling out that space where they were maybe least indexed to, and really focusing in on where the fees are. And that's what this private credit transaction is going to do.
So are some of the big private equity guys too, like Blackstone, et cetera, are they also just massive asset managers now too, rather than just private equity guys?
So they are, and I mean, they're sizable, and it's a different realm that we're talking about than BlackRock's 11 trillion. We're talking about single-digit trillions and high 100 billions. But again, that size is not necessarily representative of the fees that these firms are generating. So you think about the names like a Blackstone, Apollo, Ares, KKR, Carlyle, all of those as a group. I mean, that's where that explosive growth has been in asset management, aside from that passive, low-fee type space, right? You're seeing those longer duration assets, those private markets really being where investors want to allocate their cash. You look at the expectations for allocations to increase pretty much broadly across the spectrum in private markets. That's where some of those, we'll call them smaller, more specialized alternative managers are winning.